Hello guys, welcome to a Trading Parrot. Bitcoin has confirmed an initial rejection from 126k. There's been tons of profit taking. I have found all the information that we need to review to see if this is sustainable. After all, we have a ton of liquidity on the top that we are leaving on the table that could bring a new all-time high anytime. I'm gonna update you on my short. Yesterday I had to take urgent action. And this morning, I also had to do something else with my short. Spoiler alert, I got stopped out. If you are not part of my Patreon community, I encourage you to watch this update because it's gonna come with a lot of insights, whether you are short or long. Thanks so much, guys, for all the likes and all the views, particularly on the videos on Ethereum and Bitcoin dominance altcoin seasons that I started doing a lot more frequent, and people are really appreciating it. I'm gonna have to pinch a little bit, pull your ear. We call it un tirón de orejas, because you are not watching the market general updates. Guys, those are the pillars that sustain all crypto. And I'm making a huge effort to make sure that you're following through with that. That is shaping pretty much every decision I'm taking in this market with crypto as well. And if you really want to understand the fundamentals and get better at trading, don't live in a bubble and look outside. Guys, if you want to win an iPhone 17 by just trading on an exchange, look no further than Bluffing. Bluffing it, suffering non-KYC accounts. That is optional on Bluffing. And if you use my link in the description, independent of the trading volume or the amount you deposit, you will always get a reward. Let's start with the news today. And we got, of course, everything around the ETFs, the inflows. After the 6th of October with 1200, we got almost 900, which is also pretty impressive. On Ethereum, the same story, looking very good. But here is the catch today, guys. We need to pay strong focus, not just on the headline of this news, but we need to look into quantifying the damage of the short-term holders, how much they are depositing, at what pace, is there anything compensating that? And I promise you, you're not gonna find any video out there that is gonna touch these topics in the detail that you deserve to make the best decisions and not just part of an entertainment kind of show. Short-term BTC wells now sit on 10.1 billion in paper gains. They can realize that anytime by just literally depositing into exchanges and selling it into stable coins. 5.7 billion already moved towards exchanges. Well, that is pretty much a 60%. And this belongs all specifically to short-term holders. Those are the ones that tend to hold for short periods and then they get rid of it. Look no further than the short-term holder realized price to know where it is located. That is going to give you some perspective of the average position price of these dudes. And recently we pinched it when it was at around 108, then we pinch it again at 111, and currently is 112. So if they wanted to take further profits, a journey into that line will mean that basically, in average, they are no longer in profits. They're break even. If the price is below this line, it means that they are in pain. They are holding a red bag. Kila is saying that every time that realized P&L spikes, it signals a top. As we can see, realized P&L has had a major spike upwards on this recent move up. We need to look into the SOPR. The SOPR is going to tell us if people are already taking profits in the green in big. If it pinches the top of the band, it's very likely going to turn into a local top. We'll look into that next. BTC open interest flash for 1.44 billion USD. That's pretty huge. Long liquidation again. I've been expecting a large short liquidation, but we are still not getting it. This is the reason why wealthy people looks down on the plebs. We got also one specific OG Bitcoin well that has deposited $364 million in BTC into Hyperliquid. Hyperliquid is DeFi, so you can see everything without needing any separate platform like CryptoQuant. It's just literally in the blockchain. He has already sold $39 million, a bit more than 10% of that, and still has a lot to sell. For those who are unaware, the last time this whale started selling, Bitcoin dropped nearly 9K. Just information, these are data points, these are not calls to take any specific action. Stay informed, let's see the overall picture, look at the timestamps in the description and see everything that this video has for you. And at the end of the video, as usual, there is my final summary, every single Bitcoin video. Large traders took profit at the top, hence now we see a net short on BTC. Survive. Bitcoin made a new all-time high 126K 2 days ago. There's nothing bearish about that. Here is something interesting, and I'm bringing this, I don't know, I'm not even sure if I'm following this account. It's called Super Bro. BTC always leaves fair value gaps when it exits a range, and I find interesting this analysis because I love looking at this sort of patterns across multiple cycles or year on year. For example, in here we have 2023, 2024, and 2025. The 3 months are supposed to be bullish, but there is a key difference around this area. In October, we started very aggressively going to the upside, leaving these fair value gaps. Those are areas where the candle doesn't overlap with any surrounding candle prior or post. And you can see that in the previous 2 years, we have that cleanliness of leaving those fair value gaps. We do have fair value gaps though, but this one is getting filled. I think it's interesting, but I don't find a lot of substance on this now that I think twice. Because, for example, if you look at this area where we came back, we did close liquidity around this area. So you could argue that in here, there is a fair value gap that he's choosing not to show you, and the price came back to close it, just like this one. Or in this area in here, there is a fair value gap, and this wick down is clearing it, almost all of it. So you could argue that the 3 years have fair value gaps left behind and open. So what's the pattern in here, Super Bro? Alpha BTC. There is a potential liquidity hunt that we've been talking in the past 2-3 days, and that is 117.7. I show you on High Block Capital in a recent video, actually multiple videos, how it's located around the 117.776. We all know that, and I'm already having to carry a napkin to clean my mouth every now and then, every time I think about it. And that's one of the main reasons why after I got stopped out on break even, I took my microscopic profits. I'm gonna use that to buy the supermarket shopping today. Fair enough, but I did re-enter on my short from slightly higher and at half the volume I was riding. And I'm gonna explain to you why half the volume later in the video. Oh yeah, of course, I already sent my report in a nice update straight to the emails of all my Patreon subscribers. Any tier got already my email with the report. And yes, he's pointing out the 107 and the 117. Those are big attraction points. Martin says, stay alert, altcoin and Bitcoin open interest are both elevated. A setup we last saw in December in 2024. Back then it led to months of sideways chop followed by a 30% drop. Careful with that. I've been saying it. I was riding my long. I closed it at 123.5 because I was trailing it up. I took a long ride of from 111 to 123, that's a 12K move up that I took. Now I'm trying to build something to take advantage of this opportunity, but this comes with a big pinch of salt. There can still be higher highs, okay? So get used to the idea of still pushing higher and then coming for this. So how do we approach this? Well, how am I doing it? I just told you, less volume. Don't be such a degen. If you're mortgaging your house and you're entering on a short in here, you go right now, you take care of that, think twice, slap yourself in the face, hit yourself with a brick. I don't know what you need to do until the synapses comes back and starts pushing blood into the neurons. This must be a pain-first trading approach. Think about the pain that you're going to have if you get it wrong. Largest leverage flash since August 2026. Open interest drop minus 5%, the biggest single-day wipeout in over 6 weeks. Oh, and you think that we were not calling that? You haven't been watching my channel, guys. Look, golden pocket on the aggregated open interest. We are tracking that from these lows all the way with a blue line that has been in here for over a year. So if we end up putting that as the all-time high of the aggregated open interest for at least 3 months, you guys are gonna have to put one of these videos to them 1,000 likes. Otherwise, all the alpha is gonna be behind a paywall of $1 million. No, I'm just kidding. Martin is on fire today. Just now, 32,322 BTC. That's almost $4 billion just moved on-chain from wallets that were dormant for 3-5 years. This is the largest 3 to 5 year Bitcoin movement in 2025 so far. That is crazy, guys, crazy. And I wish I had my death indicator, Big Well Explorer. We ran out of the into the block source of data in here and we cannot see it, but I'm sure that this will be spiking massively thanks to that. And if we include 5 to 7 years in here, I am still not seeing it on CryptoQuant for some reason. Anyways, I trust you, Martin, and those deposits definitely are spooky because deposits doesn't necessarily mean that they have sold yet, but it means that we have a huge amount sitting on an exchange that could be distributed any point in time. And watch out, because those definitely can move the price. BTC, lots of profit taking happening today. Spot is selling, longs are closing. We look at all of this, guys. We enter at 126 with the short. Unfortunately, so far, I haven't been able to take much advantage of that. And that is sometimes the case. It's the cost of being more cautious. If we continue to the downside on this range, this is going to start looking at like a liquidity hunt with a double top and then pushing just slightly higher, then coming back into the previous range is definitely not gonna be looking great. It's gonna start looking like a Bart Simpson in here, which is something I would like us not to do. BTC has had a sharp rejection of 125 yesterday, now approaching 120, that's support. In case we lose this level, then we get these levels in here. I wonder if Ted has already discovered my channel, because pretty much this sounds like what I said yesterday. Dark Fost, over the past few years, short-term holders have twice sent around 50,000 in profit to exchanges. So we got a confirmation of that again. JDK analysis says that only longs for me. BTC is holding bullish structure with higher highs and higher lows for now. I agree, we can still push higher. And reminder that on the 6th of October, the forecast of the previous past performance of 1,064 days to top in a bull market, that was the 6th of October. So we are now 2 days ahead of that. Interestingly, we put the all-time high on the 6th of October, which matches the expectations of the forecast. So now all we can do is wait and see if this is gonna play out once again. If that was the case, then we have 1 full year, 364 days to see the bottom of the bear market. Let's see if today my community is still sleeping. Yesterday I got only 1 comment. Today, let's see. Can we compare past cycle when in October Banana Zone visit us again? And we just did, Alex. So far, I feel like we are in track. Remember, in October, we had a dip from September into mid-October of 12%. So far, we haven't had any significant drawdown. It's been up only, and I've been looking for some pullback. Hopefully, this one is going to give us some opportunities. With all that liquidity immediately above the price, there is still a huge incentive to first take out all the excessive open interest, clear the way of all the loser longs, and then start pushing up to take on the shorts. I'm curious about gold. Was the breakout from 4K expected, or is it just a weekly weak? Also, I will wonder if macro changes expectation on the asset for 2026, including assumption on QE, QC, and central banks accumulation. Wow, that's a lot to dig in, Samu. The breakout, not specifically to 4K, but we talk about the breakout on gold, which is one of the reasons I encourage you to continue watching my general markets videos. The specific target of 4K, I think we had a target even higher than that, and we are about to hit some important liquidations over 4K that I'm gonna cover again in today's video. The reason why gold is pushing higher is because of the weakening dollar, the uncertainty, geopolitical tensions, and I think all of that is still the case. The difference is that in the past few weeks, dollar is bouncing from support. Anyways, I'll leave that for the general markets video. Lara is asking, are we getting further and further away from the likelihood of closing the more recent CME gap as time goes? Or is there still a chance these levels can be reached? I think Bitcoin at the moment is focusing on whether it can put a banana zone like pump in the next few days into October and November. It's also taking care of shaking off the excessive longs. Whether we have to go to the CME gap at 110 to achieve that or not, that's debatable, and I wouldn't necessarily put all my bets on that point. Even holding my short, if we get into 117, I will already take part of it around there, because it's a huge level of open interest, and betting on the full collapse down is too much. So maybe I will trail it and see if it can survive beyond that point to deeper levels, but I wouldn't put a limit, take profit at 110 and look away, because that could end up really bad. Paulo, considering that this cycle may be different from the past ones because of adoption by institutions, do you think it is likely that BTC can peak this cycle without triggering the usual indicators, like RSI monthly at 85 and 90, Pi cycle top, MV, RV at top, and CBBI at 95, 100. And if you're new to the channel, you're probably listening to a lot of waka waka. Guys, I know that there is a steep curve of learning all these concepts and to take away something out of so many acronyms, but I promise you that if you stick around, they are gonna start resonating. Go and join my Telegram channel. It's full of amazing traders and people. The link is in the description. And if you miss any of these concepts, ask them in the questions as well in YouTube. That reminds my team to put in my spreadsheet of tutorials that I still have pending to do, more tutorials about these concepts. Quick and short videos covering everything. You can already find many of them if you go to my channel. Into the playlist, you're gonna find trading tutorials. That is the playlist that you want to watch this weekend, so you don't have to give up on watching my channel, neither on the profits that come with that. In terms of momentum, we are at a time in Paulo where the market resonates with previous market tops. And Bitcoin has now the opportunity to prove us that it is in a situation that is different or it is not. And me as a trader, as an investor, I don't marry either. So far, my stance is it is more likely that we're going to top by the end of the year. But I'm going to leave the door open for Bitcoin to come in and say, sorry, can we have another go? In which case I'm going to say, fair enough, let's go for it. I'm not going to get angry. I'm going to be prepared for that. And the way I'm already preparing is pretty much every single video we talk about what are the conditions where we can safely say, yes, we still have 1 or 2 more goes in Q1 and Q2. If you haven't watched that part of the video, 128 on the daily or 130 on the weekly are the 2 levels to watch at the moment for a daily or a weekly close above that. And you can start saying, yeah, we got our confirmation. We are probably gonna go for an extended cycle into 2026. Right, today we have the FOMC minutes. We have a decrease in the not change from 7.5 to 4.9. That is bullish. The 25 basis points on Polymarket decreased from 90 to 89. On Polymarket, we still have the 50 basis points that is not appearing on the FedWatch tool, and the not change remains at 9%. And everybody that is on my Telegram channel that are actively using the TTP charts are already seeing all the patterns that we took yesterday in the video. Many of them already playing out. Let's start with the 4-hour. But before I let you go there, yesterday I left you with this technical target. Look how beautiful. How many likes, how many comments you deserve when you leave a technical target at 125.47 and you pinch that level on the day after. How many other YouTube channels are hitting targets like this? And I'm not claiming we hit all technical targets. They are not meant to be hit, all of them, okay? We have very clear that. But isn't this beautiful? This was something we spot together when we were recording the video, and the day after we hit it and we bounced from that. My stop loss break even was at 122.4 or 5, I don't remember, and it closed in a small profit. And I re-enter again from slightly higher because why not? I have updated my Bitcoin status sheet. It's not a sheet, it's a presentation, and it's already shared with my Patreon community. And let's go to where we left yesterday. Yesterday we were claiming that this was a double rejection in here with bearish divergence, that we were due to come to the support of 57. If we bounce from 57 strongly, we could aim for 75, no more than that. Very low likelihood I state to get into 85. If we were to bounce from support strongly, the upside is up until 75, no more than that, but that doesn't mean that we are going to 75, okay? That's the range to play with. So how do you use that information? This is too confusing. Well, if you already enter in a short from higher prices and you were to scale up your position or you were to hold it, you know that if it goes beyond this, it's going for that very low likely scenario, in which case you are invalidated on your short thesis. Anywhere between in here up until there is okayish, because that is the typical thing that you do within a channel. So you could decide to hold. It's up to you how you interpret and how you apply, particularly how you apply it. Personally, I held, and I noticed halfway through the day that we were losing the support. Remember that I also told you during the video that there is a chance that we lose the channel to the downside, and now we are approaching it as resistance. So guess what? When we were at resistance and I got stopped out during that comeback, that revenge move in here, I say, you know, I'm gonna enter again. I pay for the supermarket already, and I'm gonna enter with half the volume that I was using before, because we DCA once, so we doubled down when we went into 126K. So from this point, I added. But what are you gonna do if you're wrong? Well, we go into here and we double down. If we go into 75 now, that means going into 130. So we look for somewhere here and into that range, and we look for a safe area to average up again and rinse and repeat. Uptrend is strong? Yeah, uptrend is strong. As strong as here? No. There is a rolling over, there is a breakdown, there is a potential retest of the breakdown into way lower, or there is a bear trap incoming that can go into 130. Am I prepared for everything? Yes. Do I have a long? Nope. Why? Because we didn't go into my beautiful risk to reward area of 117 to 118 or even lower to average into a long. Everything has a plan. And if you're trading without a plan, you're not trading, you're just gambling. Daily is doing somehow a retest, right? So the full retest is up until 55 and we bounce from 60.85. So we bounce from higher than 119.6. That was the final daily support. If we were to close below that, we will have faken out all the move. So daily still have chances to expand into 84 daily, and that is trading at the moment at 147. Is running away from the price thanks to the price coming down. So that pushes up the target for the longs. It can go up until 147, which is crazy. And we need to account for that, because if from this support we go into 85, hey, our short needs to survive that. What are we doing for that? Less volume. There you go. And the potential rejection could come in again from the second CPR of October. That is the second resistance at 123.7. If that rejects the price in here, we could come back down into 118.8. That is the second resistance, acting potentially next as a support. Ultimately, we have the three pivots here that are still sitting there, virgin and naked, and calling for the price to come home and give it a little kiss. On the weekly, things are not broken. There's nothing really to be worried about. The weekly is relaxing on the beach, as you can see, after a huge green candle that put a new all-time high. So weekly could come into support of 119.5. It could come into the point of control of 117, 118 that we crossed. It was our resistance. And if it goes to those levels, weekly is going to be like, I don't care. I just put a huge green candle, and anytime intra candle I can get bought up from those levels back into the green, or close a small red candle in there and still continue to the upside. If you are losing confidence into the weekly, just look at the previous breakout and see what you can afford and what you cannot afford in this area in here. On the weekly, we could be seeing next week a MACD bullish cross on the weekly right after a stochastic RSI bullish cross. So this supports my idea that the weekly is extremely happy. The only thing that is the hair in the soup for the weekly is this black and white between, are we gonna do what we did in the previous cycle, or are we gonna break out from here and start shouting in the street the thing that everybody else is shouting, that is, this cycle is different. And we do it if we break out from the resistance of the RSI. Reminder again that the LS2 was shouting and it managed to move down 380 so far to the downside. If this goes all the way into the band on the lower end, I suspect that price could do a little bit more deep correction. But if we bounce from the median, we can go back into the highs and then we get an additional signal. That's the way it works. SOPR in here on Bitcoin is putting a new high. So we got a second wave of profit taking in the green with a higher high on the SOPR. That means that on this place here, there's been more profit taking than on this candle at 118. So we are accelerating into the profit taking from longs that enter here or maybe here. On Ethereum, that is not the case necessarily. The profit taken peak already when we were at 4.5. Now there is some profit taking, but that is not as much relative to what's going on with Bitcoin. The percent change oscillator is coming back down below the blue line. Finally today below 11%. So taking a short from here is less effective, less safe if you want, than when we added the second order at 126. Of course, relative to price, but relative to the oscillator as well. The oscillator is not in the middle line, so there's still room for thinking short I wouldn't think long at these highs. There's still some open interest that needs to be cleared out to have the advantage from that perspective. We are just in grid at 60 at the moment. We declined 10 points from yesterday. And let's look at liquidity. This is where we can really narrow down what we need to do. So we have some liquidity that we hit yesterday, right? We noticed that at 121. There was a buying wall yesterday. What happened to that buying wall? Remember, I told you that can change anytime. Did I close my short because I got scared and spooked because they put a buying wall? Oh my God, oh my God. No, I stay in my short. That is alpha. It's implicit alpha that you get here. You watch the video, you see the buying wall, they push the buying wall higher that look bullish, but not to me. I'm sorry, manipulators. You are dealing with some serious trading style in here and data-driven channel. Here we have 120. That's the next point of liquidity. I will say that is similar to this one. And it's got me a little bit tempted with the idea that if there is a continuation of profit taking, we could go next into 120 and continue slightly into 117. But make no mistake, this looks decent. But if we zoom out, you see what you're dealing with. We're eating peanuts when we go to the downside. So why are we eating peanuts? Well, because there's some big profit taking. It's a small, short, potentially short-term opportunity, and we are taking advantage of that. What's the risk? That the profit taking stops, they will stop selling, and we're due for another push into number 3 and number 4 that are still on the table and that are way bigger than number 1, okay? On the long term, yep, absolutely, much more there to go. And notice this, you can end the cycle leaving liquidity behind. Some people are going to manage to enter in a short, not the vast majority, but a small group. People that watch the trading parrot, people that have vast experience, but the usual dude that watches channels over 1 million subscribers, that guy is going to have profit all the bull market if you want. But that day, that guy is going to get so wrecked that he's going to have to learn all these concepts if he ever is up for coming back to trading, because most of those people get burned so badly that they never come back. You never see their faces again, unfortunately. So if you are here for the longer term to even profiting in the bear market, you are in the right place. 107 continues to be the largest liquidity pool of the past 3 months. And I'm going to repeat like a parrot because some people forget, or some people even say, oh, you never say that. I watched your video yesterday. 30 days, well, we got a bunch of liquidity in here on the lower end up until 108 that now we can see again because we went down, but we left this 123,700, and that means I'm not gonna put my stop loss there, because if we just fake out a little bit up before consuming down, I'm gonna get stopped out. I'm not gonna put a stop loss. I'm gonna think, where am I gonna add higher? I already gave you the range, you already know it. If I add to my position, you will learn it first straight into your email from my Patreon community. Yep, yesterday we liquidated 75% were longs, and that was totaling 647 million. Longs less than 500 million, but still a lot. You can see that we are still dominated by longs. I don't know if I can do a cumulative in here of the full month, but definitely longs are still leading the pack. Let me see if I can find now that on CryptoQuant. Oh yeah, I found it. So this has stopped right there in the middle line. So we have an equilibrium in the past few days of longs versus shorts liquidated. We haven't properly peaked into the red, which means that shorts haven't got their love, and eventually they are gonna get a big spike in here of shorts liquidated. I suspect if we go into 130, yeah, definitely a big move like that is gonna appear. Let's look at FAR charts today and let's see what the brown whales and purple whales are doing. purple are pushing up at the moment with this move down on the price. We can see that they enter around here. They have some resistance incoming with 43 million. Located at 123 and then at 126 there is resistance, but the biggest one of 70 million is at 130. Brown whales are slowing down in here, okay? Not a lot. You can see that they still are at the highs. Let's look at the order book. We need to look into those ratios. The order book doesn't look as heavy as yesterday. Yesterday we have multiple levels of 2K, 1K, 800. Now we have a few here and a few there. Very balanced, in my opinion. Some support came in around 120. That kind of gave the psychological confidence for market orders to enter and to push the price into what could turn into a dead cat bounce. We don't know yet. It could turn into a V recovery, in which case it can go into the next resistance at 126. This one on the right hand side is I am showing only Binance Futures, which is the largest, but I also have Bybit, Coinbase, and OKX on Market Monkey Terminal. But on the heat map, which is this thing here, I'm aggregating 13 exchanges, which makes it a lot more complete than seeing just the right hand side. Yet they moved the liquidity into here and that did the trick. Actually, they moved it into 122, but it broke and they had to slide it back down to hold the price. This was a huge liquidation that they were trying to catch. I'm expecting that some longs are now in pain in here. Definitely, I should be right, because if I look at liquidations, those are the new longs that are now at risk. And these ones in here, if we also include 10x leverage. Let's look at the higher leverage. That is a push into 120, definitely. Now the shorts are at bigger risk by just 200k. So that could be enough for a dead cat bounce. But if it goes beyond, I will say 124, it's not really going to look like a dead cat bounce. It's going to start looking like the 4 hour is reclaiming the support and coming back inside this channel. And then aiming for the 75 that can push price very high, as I explained before. That resistance is pretty much around the corner. It's at 53 RSI. Probably this fair value gap that ends at that 123 into maximum at 124 intra-candle if you want. Let's look at the ratios. And we got a little bit more red closer to the price, 0 to 1, but 1 to 2 is decent support, 2 to 5 is neutral, negative below it, and 20% and more is in green today. Longs have come back, but they are still below the blue line. So it's a comeback. It's a decent relative from coming from 36. But to really resume the uptrend, I would like to see this coming back into 50s and 60s. And we got a bullish signal that triggered yesterday on High Block Capital on my aggregated anchor CBD. The CBD measures the amount of market orders, which are called typically panic buyers, panic sellers, that enter at around 121. I was talking about those panic buyers and sellers because someone put a big order at 120, so the panic buyers with market order enter at 121. That ended up pushing the price into almost 123. Now we also got a bullish signal in here because the amount of short-term liquidations were spiking beyond the percentiles. And we got now a cute fair value gap above the price that ends at 123.330. That's another way to say, well, we can go up until there, close that gap, and to call this a dead cat bounce, and then it needs to take this low and go into the next ones that are at around 120, just a thin leftover, or the 118.642, or even lower. Okay, I'm gonna do me wrap up. I'm talking like Newcastle, Geordie accent. Me wrap up. It's my wrap up. We lost the support of the broadening channel on the 4 hour, and now we're facing it as resistance. So in the short term, in the lower time frame, 4 hour, 1 hour, we're seeing something that could turn into a dead cat bounce. into the points of control that are around this area, the fair value gap, some liquidity left there to grab, that could continue the downside for a deeper correction. If we do that, the next level to watch for is 118 to 117. And below those prices, well, yeah, then you can start consuming the CME gap from the previous weeks. If we reclaim this, which is absolutely doable, then we have a range into 75 that can put the price into 130. That 130 is coming sharply down, so if the price accelerates in here and it meets with that line later, then the target is moving and it meets around here. But if we do it very fast, we meet with the target sooner, and maybe we can do it at a higher price, depending on the speed, basically. If you study in university physics, you know what I'm talking about. It's the first, second, and third derivative. You can also analysis on the price and pretty much on anything in nature. My dad was a physicist and he was in charge of the nuclear atomic plant of Buenos Aires. He was just a little bit cuckoo, if you allow me to say, but hey, people that have over 150 IQ and appear in the news tend to be a little bit with a screw kind of loosened somewhere. Let me know if you're one of those as well. I'm definitely okay and fine. I'm fine. Yeah, let's continue with the summary, guys. So we got some upside, but if the dead cat bounce continues to play out in the way that it should, with higher likelihood, we should get a rejection from lower than 124 and then continue to the downside, which is one of the reasons why I decided to re-enter on my short from slightly higher than the break-even price of 122.5. If we go higher to those elevated targets of 130, around there, then I'm gonna be looking to add again into a short. And the main reason I haven't entered in a long yet is because we still don't hit my sweet spot of 118. At that point, I start looking for a long, reducing my short, and doing other things. Thanks so much for watching this video. I'll see you in the next one. Bye bye.